Is September going to be a trap for Bitcoin? How can we know on the upcoming days if we are going to be bullish or bearish because we are getting closer to the end of the year? We're going to take a look at some price action on the chart, some data analysis for Bitcoin, and much more. What's up everybody, welcome to Bitcoin Predator, hit the like button and subscribe. So this is where we are right now on the Bitcoin price. We are already in September after a crushing August in 2025, getting closer and closer to the end of this bull run. And as you can see right here on the chart, we already enter the window where I believe that the Bitcoin peak for this bull run is going to be formed. If you are new to this channel, you might be wondering where I got this window from, and this is based on the previous performance of Bitcoin. Since institutions started to participate on the Bitcoin liquidity on the era 2 and 3, and right now even more on the era 4, we can see right here that we had a bottom at around this time right here. We confirmed this bottom right now at August, and then we had the so-weighted parabolic move to the peak of the Bitcoin bull run. So that's where I took the estimation from, which is going to happen at the late August, maybe late September. However, we have to talk about Bitcoin price action from the previous days because we had an extremely bearish August, of course, for this cycle, because if you compare for the previous cycles, the drawdowns and the pullbacks were massive at around 30%, 40%, maybe even more. And right now in August we had a price decline of about 12 to 13%. On the daily time frame, you can see here that my base case, meaning if the price goes below the level of 105k, this is where I believe we are going to change structure and switch bearish, meaning this is the end of the bull run, which I don't think is going to happen, and here's why. At around 109,300 and 107,300, we got an order block on the daily time frame, clearly indicating a push to the upside, breaking the structure from the previous swing high, and the price continued to go up, consolidated, and confirmed that this order block right here is actually valid. However, at mid-August, the price started to decline massively, getting as further as 107,500. And this drove the Crypto Fear and Greed Index back to the fear level, which was not seen from a long time. And quite interestingly enough, I strongly believe that that was one of the best times to buy, just like we did back here on June 22nd. Right now we are back on the neutral level, but as you can see right here, back on the end of August, we reached the actual fear level, and it was actually a good time to buy. And as you can see right here, that order block at around this level got actually filled. So here is our next question. We had a confirmed break of structure right here at the 109,300 level with a lot of volume to the upside, and the price continued its way up. And the next key level that we're gonna have to watch for the next break of structure is going to happen right here at the 113 and 500 level. When you zoom into the 1 hour time frame, you can see that after the price has reached that order block on the previous swing low, it consolidated for a really long time until the beginning of September. And it was forming some interesting order blocks that I actually had my trades to get profitable. Right here we had a huge candle to the upside, breaking the structure right here, and the price came back down to grab liquidity, filling out the order block and continue its way up, and then broke the structure again at the 112,500 level, and the price is now back down. And as you can see right here, we had a 4-hour order block which was already filled, and the price seems like to be behaving bullish again. And that's exactly why I placed my target right here at the 113,500 level, because I believe the price will continue its way up to the upside. And there are a couple of reasons why I believe that Bitcoin price will continue its way to the upside over the next coming days. The first one is, as you can see right here on the ETF inflow, although it is decreasing a little bit. I do not see a huge outflow from the ETFs from the Bitcoin liquidity, even compared back to February of this year. This means that the institutions are still holding their positions and have not yet started to take big profits. So I believe that the inflows will continue to rise back up and the price will follow along. And you guys know how the price behaves. They just like liquidity. After we had a big drop by mid-August, we had a huge liquidity being taken from the downside all the way until there was nothing left. And right now, as you can see right here, look at how much liquidity we have been accumulating on the upside since then. So that's why I believe it is extremely likely that the price will back up and grab all this liquidity that is left. MVRVZ score still has not reached the peak yet, as according to my estimations there is still a little bit of room to the upside in order to get to the top of the Bitcoin bull run. Now, whenever we talk about Bitcoin seasonality, you cannot look at the months isolated. You have to take into consideration the whole context. And I see most traders and influencers out there just looking at September and thinking, oh my god, this is a trap. We are going to have a bearish September. This is the end of the bull run. But I don't think this is actually the case. And here's why. You have to imagine that there is some offset on the Bitcoin price behavior according to the seasonality and according to the cycle progresses. And if you see right here, whenever we have a bearish August, we had bullish September. Again, and the same for the opposite. When we had a bullish August, we had a bearish September. And right now, if you see right here, we had a bearish August, and I believe that we are going to have a bullish September. And I'm going to tell you exactly why I believe this is the case. When the Bitcoin price diverges from the M2 global liquidity, it eventually catches up. Right now, we are diverging a little bit, and I think that the price will get back up and meet the M2 global liquidity back again. But like I said, I don't think the price will spike too much higher. Because as you can see right here, the M2 global liquidity is actually consolidating. It did not get a new all-time high. And this can also be confirmed from the M2 growth rate that I also watch closely on my analysis. And as you can see right here, since the end of June, the growth rate of the M2 global liquidity has been going down. And that can be reflected on the chart as well, because you see that the M2 has not reached new spikes all the way up since then. So that means that there is less liquidity coming into the market as time goes by. And from this region right here, you can see that the M2 rate, when I believe that we can start to get worried, is when it gets to the 1, maybe 3 or 5 level. But this I consider to be already a yellow sign. Two more confluences that I think we still have some way to go is the DSS, where it reached the bottom right here and is already forming an uptrend. And we can also see that the RSI had got as low as the 39, maybe 38, just like in previous times. Right here in June, it dropped 1, 2, 1, 2, and upside. Right now we had 1, 2, 1, 2 drops, and right now I expect that we are going to the upside. The RSI already crossed the DMA right here and already bounced on it, and I think right now it is going to continue its way up. And the main reason why I believe that the liquidity will come up until the end of the year is very simple, guys, because we are going to have rate cuts. Right now, from my tweet right here, there was a 98% of a rate cut in September. But right now it has decreased to 89, but take a look at this. Everyone is expecting a further rate cut that right now is around 375, 400 basis point to 10% of chances. So if you gather both of these data right here, we can conclude that the chances of a rate cut is almost 100%. And the reason for that huge increase is because the labor data is showing that less people are being employed, and at the same time, more people are losing their jobs. which can be confirmed from the recent data of non-farm payrolls and the unemployment rate. What also contributes to the higher chances of a rate cut is as well as the inflation. The true inflation right now is ranging below the 2% level, and the tariffs are not going to be a permanent impact on the economy. Fed Jerome Powell said that on his speech recently. So we can see right here that the inflation is relatively under control. However, just because we are going to have rate cuts, it doesn't mean that it is going to be bullish. The only scenario when we are going to get an actual bullish rate cut is if we are going to have a normalization cut. And for that to happen, unemployment rate must be as low as possible, while at the same time the economy is still must be going well as the 10-year real interest rate that must be as close as possible to the zero level. However, if you do not understand the importance of this data right here and how it relates to the bullish bearish context of the rate cuts, you have to check my next video where I'm going to explain in detail how can you know if the rate cut is going to be bullish or bearish based on key economic data. Go check my next video in the screen. Thanks for watching. See you in the next video.